Okay. I'd like to call the meeting to order. Moved by Councillor Kotick, seconded by Councillor Keogh. Resolved that the special meeting commence at the hour of 2:01 p.m. And be it further resolved that Council acknowledges that we are meeting in the Robinson Spirit Treaty area on lands that have been traditionally used by several Indigenous nations. But we would like to pay special recognition to our closest Indigenous neighbors, the community of Biktikon Anishinaabe and Netsagamik Anishinaabe First Nations. We wish to recognize the long history of First Nations and Métis people in our region specifically and show respect to them today. All in favor? Carried. Any disclosure of pecuniary interest or general nature thereof? Seeing none. Move to the approval of the agenda. Moved by Councillor Ruff, seconded by Councillor Kotick. Resolved that the agenda be approved as circulated. All in favor? Carried. No delegations or presentations. Move to business. Moved by Councillor Keogh, seconded by Councillor Ruff. Resolved that Council has been provided a presentation by Grant Thornton auditors of the draft 2021 consolidated financial statements for the Township of Manitowoc.
Thank you. There should be two reports in your package. There should be the consolidated financial statements and the report to council. So I'd like to start with the one that is on the Grant Thornton letterhead, the report to council. And this report is what we communicate to council as those charged with governance. And this report discharges Grant Thornton's responsibility as auditors. I'm not sure if you have that report. Is it?
Yeah, no, this is everything. No, there was nothing with their letterhead on it.
I just saw Councillor Ruff pull it out. It's got the pictures of the people in the front.
Oh.
No, the other one?
Oh, it's upside down.
Okay,
That's the cybersecurity.
Yeah.
yeah. Okay, so.
He's going to grab you.
Okay.
Anyways.
Sorry. Okay, sorry.
Okay, no problem. So this report is what we issue as auditors and under the Canadian auditing standards. And this report discharges our responsibility as auditors, as we have requirements on specific items that we are required to communicate to those charged with governance. In this case, without an audit committee, then council is that group charged with governance. So just a summary of where we stand heading into the meeting today. The financial statements will be presented after I finish the summary here. The financial statements will be presented with Lindsay will walk through them. So we will require council hopefully to approve those statements. Management, today being our report date, management will also sign a management representation letter that will be provided back to us. And because today's our expected audit report date, we just have to make sure that we've reviewed subsequent events up to today because that is the requirement of the standard. So in terms of the scope of the work, today we're presenting the consolidated financial statements for the year ended December 31st, 2021. However, we also are responsible for the audit of the trust funds and the audit of the library, but we're not presenting those today. In terms of sort of overall, again, this is going back to 2021 financial statements. In terms of our risks and results, one of the items that we had to consider for the 2021 year end was the impact of COVID. So COVID happened in 2020, but there was some carryover COVID impacts in 2021. So for the 2021 audit year, we had to review, the economy, what was happening, make sure that there was nothing that needed to be adjusted for in the municipal financial statements with respect to COVID. So were there any asset impairments, loss of revenues and those types of things? Because as you're aware, many organizations didn't survive COVID and some struggled through COVID. So we did look at the impact of COVID and there is a note to the financial statements, but we were happy with the results and we didn't have to have any further adjustments to the financial statements when it comes to writing off bad debts, writing off impaired assets, and those types of things. When we look at our significant transactions, you'll notice when we get to the financial statements that, of course, capital expenditures is a big disbursement for the municipality, and total capital asset additions in 2021 were 1.1 million, and the big components of those additions were $200,000 spent on fire equipment, $239,000 on a loader, $255,000 on paving, $217,000 on an airport tractor, and about $121,000 on yard work. So part of our audit includes reviewing those additions to make sure that they meet the definition of capital asset, to make sure that they've been accounted for correctly net of HST, and to make sure that they're being amortized in accordance with the amortization policy for their useful life, and making sure that there's no management bias in those policies. So we had no exceptions. The next big item is your gas tax funding. You received about $241,000 of funding in 2021. And because there are restrictions on how you spend that money, any money received doesn't become revenue until you've incurred the eligible expense and you actually spent it. So in 2021, there was about $255,000 that was spent from the gas tax money, and therefore that got taken into revenue. At the end of the year, there's a remaining deferred balance of unspent gas tax money of roughly $585,000. So we make sure that we review the allocation in accordance with the funding agreement, and we also make sure that the expenses are eligible under that funding agreement. Then your next big transaction is your OMPF funding. You've received about 1.7 million. And although that's a big sum of money, it is unconditional funding. So you get it just by being a municipality. So there's no restrictions on that money, and therefore it's revenue the minute you receive it. And we've reviewed your allocation of your share of that funding envelope. The next big item is your landfill closure and post-closure liability. The landfill liability is an estimate because what you have to do is estimate your annual usage of the landfill capacity. You have to estimate your costs to close, and then your future costs for post-closure care. So the whole liability is an estimate with assumptions relating to interest rates, inflation rates, annual usage. There was a report done in 2020 regarding your actual usage rate. So that annual average usage rate was used for 2021 until the next report comes through. And as a result of all of those assumptions, there's a liability of about $1.2 million that's been recorded. And that's a big increase from the year before. And that's because there was some significant changes in the assumptions regarding the costs, and the big piece being the inflation rate. In terms of our significant risks, when we do an audit at the planning stage, we identify areas of risk, and we spend more of our audit efforts in areas of higher risk. So these areas are the ones that have a higher risk. It doesn't mean we didn't do work elsewhere. It just means these are the areas that have higher risk. And in the auditing standards, there's a presumed risk of fraud in revenue. And in this case, there's lots of revenue streams for the municipality, but we've identified the grant revenue stream as the one that has the highest risk. And there's a couple of reasons for that risk. Number one is you could have different funding envelopes, and you can have one funding envelope that has a surplus, and the funding agreement says you must repay the surplus. And then you can have a funding envelope that has a deficit. There could be an incentive to move expenses between the different envelopes to avoid repaying a surplus, or to report the expense in the wrong period, or to report an expense that doesn't belong and doesn't meet the stipulations of that agreement. So we look at the significant grant agreements. We make sure we understand the stipulations that come with those grants. And then we make sure that the expenses that were claimed under those grants actually are eligible expenses under the funding agreement. And we had no exceptions there. The next risk is the presumed risk of fraud in management override. Again, the auditing standards says that that's a presumed risk, and that relates to really journal entries. So no matter how good your system of internal control might be with respect to who's approving invoices, who's signing checks, who does the bank reconciliation, no matter how strong those controls are, someone at the very end of the transaction stream could post a journal entry to just move things around and undo all of those good controls. So we look at journal entries just to make sure that the entries have a business purpose, and that they're not just entries posted to move things around, keeping in mind that there's a segregation of duties with respect to journal entries as well. So we had no exceptions there. And then we always look at fraud and legal acts. We want to make sure that if we come across anything, whether it's through our discussions with management, review of minutes, and review of any legislations, so forth, if we identified areas of fraud or legal acts, we would have to amend our audit approach. But that we had no such items identified and nothing came to our attention regarding that matter. And then the last significant item is an estimate. And estimates are items that, again, they're not necessarily black and white. There could be a range that goes with that estimate. So we want to make sure that the estimates don't have any management bias embedded in those estimates, because by changing an estimate, you can change the financial results. So in this case, there's an estimate for allowance for doubtful accounts, and there's also the estimate for the landfill liability that I just spoke about. We had no concerns there with respect to any management bias. And if you look at the rest of the report, I won't walk through it in detail, but those were the highlights of the significant transactions as well as the significant risks. You'll notice on page 8, there were some adjustments that were made to various account balances. And then on page 9, there's an item called the unrecorded audit difference. What this is it relates to in the prior year. So in 2020, there was an understatement of an accrued vacation pay liability, which was not significant. It wasn't material to the financial statement, so it was not adjusted. So in 2021, that understatement has a reversing impact in the fiscal 2021. So this unadjusted misstatement reflects the impact on opening accumulated surplus from the 2020 financial results. Again, the amount's not material. It doesn't change our opinion on the financial statements. And if you look forward to the rest of the report, I won't walk through it unless there's questions, but effectively it talks about the rest of our audit work beyond the significant areas. It reconfirms our independence and also talks about the upcoming accounting and auditing standards changes. So in 2022, for that audit, all auditors in Canada have to follow Canadian Auditing Standards CAS 315, and there's an appendix here that talks about all of the changes, and that's from the auditor's perspective with respect to the work that has to be done to meet that new standard. And then in 2023, there's accounting standards changes that affects the municipality with respect to financial instruments as well as asset retirement obligations. So before we dive into the financial statements and the audit report, is there any questions on this particular results report?
Seeing none.
Okay, so I'll take a minute and present the audit report before I pass it on to Lindsay to walk through the financial statements. And I just want to take a minute to sort of remind everybody what an audit is and what an audit isn't. So when we audit the financial statements, there's two concepts that apply. We audit for reasonable assurance. We don't audit for absolute assurance because we would never get absolute assurance. You can't audit what's not there. And we also audit for what we call a material misstatement. So we're not saying that these financial statements are perfect and contain zero errors. What we're saying is we've done sufficient work to identify material misstatements. And an example would be if these financial statements were misstated by $50,000, that's not material to the financial statements. It would not change your audit report. But if, for example, there was a misstatement, let's say of $175,000, if we had that level of misstatement, we would first ask management to correct that misstatement. And if for some reason management chose not to correct that level of misstatement that would be considered material, we would actually change our audit report. So what we're saying is we're looking to obtain reasonable assurance of a material misstatement. Also, when we audit, we don't audit every transaction or every account balance or every account or every dollar that flows through the books. At the planning stage, we identify areas of risk. And as I mentioned earlier, we spend more of our audit efforts in areas of higher risk, and we spend less energy in areas of lower risk. On some accounts, we might use the approach of looking at every item over $1 threshold. On another account, we might do a trend analysis compared to prior years into budget. And on other accounts, we might take the population of transactions, put them into the computer, and let the computer pick a sample size to test. And also, we look at your internal controls, sufficient to decide how we're going to audit certain items, but this opinion is on your financial results. It is not an opinion on your internal controls. So I'll read the official audit opinion, which reads as follows. In our opinion, the company and consolidated financial statements present fairly in all material respects the consolidated financial position of the Corporation of the Township of Manitowocz as at December 31st, 2021, and its results of consolidated operations, changes in net financial assets and cash flows for the year then ended in accordance with Canadian Public Sector accounting standards. So in other words, it is a clean audit report. And now I'll let Lindsay walk through some of the financial highlights and the actual financial statements themselves.
Thank you, Judy. I'm Lindsay Hallow, and I'm the Senior Manager on the engagement. I believe everybody has a copy of the financial statements. I'll just take you to page number 3, the consolidated statement of financial position. Also, please let me know if you would like me to share my screen, and I can, put the financial statements up if that's easier also.
We are live streaming right now.
Okay. So on page 3, we have total financial assets of 13.7 million versus the 13 million in the prior year. You'll notice the big variance there is in terms of your cash balance is up at almost 8.8 million or 8.9 million. You'll notice in the prior year, though, you had accounts receivable of 3.9 million. So in the prior year, you had a large receivable of about 3 million for the airport project for your grants. So that is the large variance there. In terms of your liabilities, you have total liabilities of the 3.3 million versus the 2.76 in the prior year. Your accounts payable are down slightly just due to the timing of the invoices. Also in the prior year, you did have a large holdback set up for approximately 350,000 for, again, the airport project. You also have your deferred revenue of 1.3 million versus a 1.1 million. Making up that deferred revenue balance, you'll see in note 6 is your gas tax. And then you have a large balance for OCFA of 633,000. So again, deferred revenue is money that you've received, but you haven't earned it yet or spent it yet. So you have net financial assets of the 10.39 million versus the 10.26 in the prior year. Then you have your non-financial assets of 22.4 million versus the 22.8 in the prior year. In terms of your capital assets, Judy mentioned that you did have additions of approximately $1.1 million, and then that was offset by amortization of about 1.5 million. So you have total accumulated surplus of 32.79 million, which we will see on Schedule 1 when we get to the back of the financial statements. That shows you a breakdown of what makes up that accumulated surplus balance. On page number 4 is your consolidated statement of operations and accumulated surplus. So you had total budgeted revenue of 7.8 million versus the 7 million actual. In terms of your taxation revenue, you have the 3.6 versus the 3.1 actual. So there was in the year large write-offs for municipal owned properties of about 547,000. There is a small edit that we will make in the budget because that 547,000 hasn't been also included in the budget line there. So we'll make that small edit afterwards before we issue the statements in final. And you will see the offsetting expense where it was expensed in general government on the next page. User charges were up slightly compared to the prior year of 1.3 versus, compared to the budget of 1.2 versus the 1.3. So your golf and food were up, landfill tipping fees were also up, and airport was also up there. And just as a reminder, in 2021, it was, a COVID year. So you'll see some of, those variances when we get to the expenses. In terms of government transfers, your Government of Canada funding, so that the actual balance is made up of mostly your federal gas tax there. In terms of the province of Ontario, Judy mentioned, the largest balance is the 1.7 of your OMPF funding. So total government transfers of the 2.5 versus the 2.1 actual. And then in terms of other revenue there, so investment income is in a negative position. So it was technically an expense. There was an impairment loss in the 2021 year for your bond funds in the one fund. You have other income of 215,000. When you look at the prior year in 2020, just a reminder, you did have a large amount of revenue of about 700,000 from the NWMO Community Wellness. And then you also had a large amount of 200,000 from Barrick there. Then you have your penalties and interest on taxes, and then your rent and leases. So budgeted 480 versus the actual of 415,000, giving you the total revenue of just over 7 million. So on page number 5 is your expenses. Your total budgeted expenses of 8.4 million versus the 7.3. So in your general government line there, that's where you saw the expense of the 547,000 that was written off from the taxes in that line. And again, we will adjust that in the budgeted column. Other variances mostly were due to COVID. When you look at the different departments there, wages were down, salaries and benefits, and also in terms of your rec and culture, some of those, programs were closed at that point in time. The other just in variances is in your environmental services. So that's where your landfill expense of about 600,000 you see in the actual for the change in the landfill liability. And again, that's not reflected in the budget there. So annual deficit of 293 million. Then you have your accumulated surplus beginning of the year of 33, giving you an ending balance of the 32.7 million. So again, the 293 is your PSAP surplus, and we'll see what the actual in-year surplus was, which was, almost $1 million when we look at Schedule 1 on page 21. So on page number 6 is your statement of changes in net assets, and this just reconciles your financial assets, on your statement of financial position to the 10.3 million. On page number 7 is your consolidated statement of cash flows. This is just your sources and uses of cash and then reconciles to the cash balance at year end. And then page number 8, you start the notes to the financial statements. So the first note is just your significant accounting policies. And there's been no changes from the prior year in that section. And then on page number 13, it's just more details of some of the balances. So, note number 3 talks about your taxes receivable. There was a change in the allowance this year because of the large write-offs that happened in the year. So there's the $1 million in taxes receivable compared to the 971 in the prior year. It gives you a bit more details on note number 4 of your accounts receivable balances. So that's where you'll see in the prior year was the large $3 million grant receivable for the airport. And also on the receivable line there, your HST receivable has come down significantly from 500,000 in the prior year to 110 in the current year. On note number 6 on page 14 is just the details of your deferred revenue balance. So there you had your gas tax balance of 584 that's unspent. And then your OCIF funding of about 633,000 is included in that balance of 781 there. On note number 8 is your landfill closure and post-closure. So as Judy mentioned, there was a change in the inflation rate, which caused a very large change in the estimate in the year. So the estimated inflation rate was 3.4 this year compared to 2020, it was under 1% there. And then I'll just draw your attention to note 11 on page 17, which is the continuity of your reserve and your reserve fund balances. Your investment in the one fund is used to support your reserve funds there. On page number 18, note number 13, we just disclose the contractual obligation with Aqua. So it was a 7-year agreement, and there's approximately 3 years left on that agreement. And then note number 14 is your budget figures note. So this note reconciles the budget that council would have approved to the budget presented on the statements. So adjustments are made for the capital asset additions, which you would budget as an expense, which we set up as an asset on the financial statements. We also make the adjustment for the amortization. And then you would budget your reserve transfers as either revenue or expenses, which we're removing for the presentation of the financial statements. Note number 16 is just your COVID impact note, which we have discussed with management, and they've concluded that the disclosure is adequate. And then Schedule 1 on page 21 is just the breakdown of your accumulated surplus there. So you'll see you have a general fund surplus of the $971,000 in the year. You have your investment in your capital assets of your $22.3 million, and then your unfunded items. These are items that will be funded in the future. So your landfill liability of $1.2 million. And then the breakdown of your reserves of 1.9, and then your reserve funds of the 8.7. And this ties back to the statement of operations and your statement of financial position. So you have total accumulated surplus of the 32.8 million there. On page number 22, Schedule 2 is just your continuity of your tangible capital assets. So you'll see there you have the additions, you have your opening balances, and you have your additions in the year of 1.1 million. Any disposals, and then you have your accumulated amortization, your opening balance, the amortization of the 1.5 million, the ending balance of your accumulated amortization of 37 million, giving you the net book value at the end of the year of the 22.3 million. And then Schedule 3 is just your consolidated schedule of segmented disclosure. So it just breaks down the statement of operations by segment. Just a different way of breaking it down. That concludes my presentation. Is there any questions on the financial statements?
Any questions? Nope, seeing none. Good job. Okay. Next.
Lindsay, does that conclude the presentation?
Yes, it does.
That's it?
Through you, Mr. Chair, I have one question.
Yes, please.
So I understand that the trust fund and the library was not included in the audit. Can you advise the timeline on receiving that information?
Yeah, we're like really close. So we're hoping for the end of the week.
Okay, that's great. Some of our funders and the province requires that information to be presented as well. So we'll be looking forward to receiving that.
That's it. Well, thank you very much for that presentation. It's a lot to absorb, but it all looks good. Okay, that's it. Okay, so Moved by Councillor Keo, seconded by Councillor Rupp. Resolved that council has provided a presentation, has been provided a presentation by Grant Thornton auditors of the draft 2021 consolidation financial statements for the Township of Manitouwadge, and further that upon conclusion of council's review, council does hereby approve the draft version as presented. All in favor? Carried. Now we're over to, no closed session. Business arising, no. Confirmation bylaws. Okay, thank you. Moved by Councillor Kotick, seconded by Councillor Keo. Being a bylaw to confirm the proceedings of the Council of the Township of Manitouwadge at its special meeting held on Wednesday, July 31st, 2024, be ready first and second time. And furthermore, be ready third time, passed and numbered as bylaw number 2024-29. All in favor? Carried. Okay. Adjournment. Moved by Councillor Hudson, second by Councillor Rupp. Resolved that the special meeting adjourns at the hour of 2:32 p.m. All in favor? Carried.
Thank you, everyone, for the presentation today.
Yes, thank you very much.